What's up, guys? Welcome back to my channel. I wanted to give you guys a quick stock market update. I felt that we had a pretty muted week this week because we were waiting for the jobs report on Friday, which is tomorrow, to be the major catalyst that would send the market higher or lower. Uh, but I closed my positions early in the week because I wasn't really fond of this rising wedge that we were developing. You could see that the markets were sort of just grinding higher, and that's not what you want to see in a fifth wave. I know that I counted this as one, a two, a two, and then a three, and then a four consolidation, and then a five for a possible push higher. But we are forming these negative divergences everywhere, especially on the daily time frame. So let's take a closer look into it. So you could see that we're forming this, we're just bouncing back and forth, and all the structure is corrective. But we finally hit around 599 600 on the SPY earlier today, and then we sold off of Musk and Trump having a Twitter war. And all that is noise, I think, in the near term. And I believe that this pullback is kind of healthy, especially when we've just been kind of grinding sideways and pushing higher. Um, I wanted to see some sort of structure in order for us to really push if we were to move higher off the jobs report. So that's what we're seeing so far, and I think this is bullish. MACD is still in positive territory, even though we have negative momentum so far. I think that this could recycle back up and get that final push above 600. Conversely, I was thinking about shorting over here, but I wasn't really comfortable shorting because if you look at moving averages, the 9 EMA, right, the 20, the 100, which is that white line, the 200, the 50, we're all holding above these moving averages. So any drop could act as support in the near term. So the 20 is acting as support, the 9 EMA is acting as support. So, you know, it's not enough to shake off, from a market psychological standpoint, it's not enough to shake off all the bears that are looking for the downside. I would assume that any decisive break above it for at least 1 or 2 days could cause everyone to become more bullish than they are currently. And that would be the perfect recipe to move downwards. And yeah, even though this is forming a rising wedge, I'm just not very comfortable shorting here. And another reason is if you look at the weekly time frame. So let me switch back to the weekly. Let's move to the SPX. If you look at the weekly time frame, you can see that we're forming some sort of candle here. This candle is not enough for me to say that it is a doji or a spinning top that could lead to more downside next week. And the reason why is because this spinning top and doji is within this consolidation. What I would like to see is some sort of spinning top or doji above this consolidation. So maybe that's next week after we pop off of the jobs report. So we could see something like this, get a pop higher briefly and then come down next week and then start a new reversal because we're at this point we're too close to these moving averages, right? The the 20, the 50, the 90 EMA. So, it's hard for me to see some sort of reversal in this weekly candle, like a doji in this weekly candle and then roll over next week because the bullish momentum is still there on the MACD. So I'm thinking that it's possibly next week where we see that doji and then gonna follow through the following week. So that's why I'm still, despite what we're getting on Trump tariffs and everything like not Trump tariffs, the Trump feud causing the sell-off, you know, the sell-off is still muted. Like we're still holding above these moving averages. The pullback was pretty healthy. We're not breaking any key supports on the SPX. And if you look at the SPY, it's pretty much the same way. Like we're not really breaking any critical support levels, right? We're holding them as a matter of fact, and we haven't really even tested this 100, which we've tested the past few weeks, and we didn't even get there today, despite the huge sell-off in Tesla. Tesla dropped like 14% because he started going off after Trump. So I saw this bearish divergence. I wasn't really sure if this whole thing was going to play out, but it kind of did. And I think that this could be ammunition for SPY next week, especially if we had the Robotaxi event and we have the WWDC event for Apple. I think this could be ammunition for SPY to just move higher, even if it's temporarily. Get a little pop from Apple and Tesla, these big mega cap tech stocks, and just drive SPY a little bit higher and give bears a better entry for a short. Because at this point, shorting at 590, I mean, it could work. Maybe we got a bad jobs tomorrow, but ADP earlier this week kind of signaled that we're gonna get a bad jobs number anyway. So I'm assuming that number is probably even priced in at this point. So yeah, let's see, how this plays out. I still think I'm still leaning bullish and hope this video helps you guys, figure out the markets, and I will see you guys soon. Peace.